Hi, this is Kerry Artek with Wicked Stocks, bringing you an individual stock pick in AMD, Advanced Micro Devices, symbol AMD, of course, recorded Tuesday, March 28th, 2023. These are basic fundamental data courtesy of Yahoo Finance, certainly a large cap stock, very heavy daily volume on this. AMD, Advanced Micro Devices. This is a weekly bar chart. I'll be showing a weekly bar chart throughout. And as our subscribers know, we put out a couple of videos over the last couple of months on AMD, also showing this recent buy signal that is still in effect, solid pullback support at 80.83. That channel top is dropping 121 a week for the week of Monday, March 27th. So, as usual, you can monitor the existence of this solid floor of long-term support, dropping 121 a week on a week-by-week basis as we move through time into the third quarter. And we can also show on the daily chart. This kind of shows, I always say that you can act on these signals intra-week, during the week, despite the fact it's a weekly bar chart. You know, when we closed above this formation on the week of Monday, March 13th, Tuesday, March 14th, we settled above this formation and we cleared it by a full 1% margin. You can see how about a week earlier we also settled above it, but not by the 1% required threshold. So the first time that occurred was on Tuesday, March 14th, and you could see how the market just pulled away following that buy signal, follow through to the upside. That formation, once again, 80.83 this week, dropping 121 a week. And from here, I'm anticipating the next meaningful resistance that is presently at 108.18 and dropping 81 cents a week. And this is nothing more than a descending two-thirds speed line. I use channel formations and speed lines a lot in my analysis, and this shows a little bit how the speed lines are constructed. You take that 164.45 November 21 high against the pullback low October of last year, 0.666. Two-thirds of the way back up is 127.75, and you draw a trend line from the high 164.45 to the 127.75 mark in the time frame in which the low was made in October. That is the descending two-thirds speed line. There's also a descending one-third speed line that I'm not even showing here that is well below the market right now. So the way this is setting up, you've got solid pullback support in the low 80s. I don't know if we'll see that anytime soon. And above which the 108.18 level is our near-term target. And by near-term, I'm talking 3 to 5 weeks. That is a level that can contain monthly, possibly quarterly buying pressures. We could test 108.18, fall back to 80.83 or that channel top over the following month or two. We could trade inside that gradually widening wedge for the next several months. And that is sort of your near-term dynamic. Buying support in the low 80s, selling resistance in the low 100, 108.18. I'm also open to the possibility of closing above 108.18. Part of that just from having closed above the 80.83 channel top. But I consider these two line studies equal in strength, equal in significance, and really not unless we close above 108.18 would I expect follow through over the following, I don't know, 3 to 5 months perhaps to that 164.45 November 21 high. I'll get to that in a moment. But if we were to fall back into the low 80s, there is also now a new rising channel bottom that is based on the last 6 months activity, that is based in part on the recent high, and it's at 75.56 for this week of Monday, March 27th. It rises 130 a week. Over the next few weeks, over the next month and a half, this area is really kind of a range that all comes together in about 3 weeks, and then it opens up again. But we'll just call it, for right now, we'll call it the upper 70s. That's 75.56 rising, that 80.83 dropping. That is a solid zone of pullback support. If tested, is good long entry. A good long entry area. If we dip back into that zone, you could reach for 100 out of the money calls that don't expire for at least several months. You may go further out than that to preserve delta on the way up. The indication, at least right now, for whether or not we will fall into the upper 70s over the next few weeks would come with a settlement this week, Friday, below 92.90. That is the low of the high from a week ago. And oftentimes, when you close below the low of the high, you can see follow through selling. I'm not exactly sure we will fall all the way back into the upper 70s, but I think that that is a real possibility. And so closing below 92.90 any day this week, actually, but certainly a Friday settlement below 92.90 should set this market on a bearish path for the next few weeks. And I would anticipate the possibility of testing that narrowing 75.56 to 80.83 region where we could bottom out, not only through April, but even into the third quarter. And once tested, that 108.18 descending two-thirds speed line in reach within several months of that. Holding above 92.90, I think that 108.18 speed line is likely to be tested by the end of April or sooner, possibly over the next few weeks, where once again we can top out on a monthly basis, possibly through the balance of the second quarter. We could trade, as I say, inside the upper 70s to the low 100 area, that 108.18 dropping 81 cents a week for the next few months. Now, as I said earlier, closing above 108.18 would be another sign of longer term strength. And I do think that overall, over the following possibly 3 to 5 months, could take longer, could take into later year before retesting that 164.45 high. 108.18, if we close above it. And if you bought those, say those 80 or 78 out of the money puts, you'd want to liquidate those and I think reach for 140 to 165 out of the money calls that don't expire. If you're doing the 165 calls, I'd go out a full year just to preserve that delta and reduce the theta element, the time decay element. Closing above that 108.18 speed line, dropping 81 cents a week. The first target within 2 to 3 months, I think, would be the low of the high, 140.72. That should give the market trouble on at least a weekly, if not monthly basis. That's why I say reaching for those 140 calls. If we close above 108.18, that speed line anytime soon, that would be a good way to go. And ultimately, the 165 calls, I'd go a year out on that. I don't think it'll take a year. I think 3 to 5 months is certainly in the realm of possibility here with the kind of the higher volatility that this market can present. And so 108.18 is our next big test of the upside. If we close above it, 164.45 anticipated by the end of the year. Until then, 108.18 is our midterm ceiling that can contain buying on a monthly, possibly quarterly basis. And once tested, we could fall back into the low 80s, upper 70s within a matter of several months. I think that pretty much rounds it out for this particular Wicked Stocks video analysis. Check us out at wickedstocks.com. The video you just saw, we present 2 of these every week on individual stocks. We comb through hundreds of different charts and we try to present those that are of a higher volume, more commonly known stocks that are presenting actionable signals, or at least prepping you for those actionable signals in the week or 2 ahead. That's all I've got. Check us out at wickedstocks.com. We'll be back soon. I don't know how soon, with a free individual stock pick on YouTube, on our Wicked Stocks YouTube channel. But you'll see it if you become a Wicked Stocks subscriber. I'm talking on the YouTube channel, a follower, as they say. You'll be notified each and every time new content has been uploaded to our channel, and that includes the daily Tesla and daily Apple reports, which you're probably already familiar with. You have a great day. We'll be back soon.